هلو هلو. السلام عليكم يا شباب. هلو هلو. السلام عليكم يا شباب. السلام عليكم يا شباب. الناس تجمع ونبدأ نتكلم إن شاء الله. نشوف ميت كيفن لحد الناس تجمع.
Well, folks, it is official. We are now in a bear market in the stock market. Yes, one of the indexes in the market just went to bear market. And I know there's a lot of people that are probably watching this video right now that have never been through a bear market before. So you're like, okay, how does this work? Like when do we start coming back? How long does this market go down for? All those kinds of things. How am I positioning in this sort of market and things like that? So in this video, I want to try to address a lot of those concerns, all of those things that people are thinking. Like, oh my gosh, we're actually in it. We're actually in a bear market. By the way, can you guys guess which index it is that we are in now? Bear market. And if you didn't know bear market, by the way, essentially what that is, it means the index is down at least 20%. And it is not the Dow, it's not the NASDAQ, it's not the S&P 500, this is the Russell. The Russell is now officially in bear market. By the way, Apple single-handedly saved the Dow, NASDAQ, and S&P. If you didn't know, Apple had unbelievable earnings. Like Apple had such good earnings that it was like impossible to send that stock down there. They like literally impossible. They beat by $5 billion on revenue. $5 billion they beat by. The guidance was, well, they didn't really give official guidance, but they kind of gave like hints to guidance. That sounded really healthy. They said supply chains are getting better. And so literally Apple saved the entire market. If it wasn't for Apple, this, it is very likely the NASDAQ could have slipped into even, essentially a bear market, which that still could happen, so do keep that in mind. It's just Apple saved the day. Let's put it that way. Apple really came through and took the whole stock market on their back and said, okay, we'll keep it together, guys. Microsoft did help as well, okay? I will say that. So this was out of the Hungry Bowl, basically. Renan put this article out. By the way, what a cute little bear. I mean, that just needs to be said, okay? One of the major U.S. indices just descended into bear market territory as of Thursday's market close. The whole market has been experiencing some wicked volatility the past few weeks, which, by the way, this is going to mark 4 straight weeks for the stock market being down, if you did not already know that, okay? January should be the worst, basically January in the history of the stock market. But the Russell 2000 has been hit especially hard. The index closed
Thursday's trading session down about 21% from its high back in November of last year, which essentially is just a few months ago. Isn't that insane? 21% in a matter of like a couple months. This decline is good enough for a bear market. The first time the index has experienced one since the March 2020 crash. Equities originally opened on the green on that day, but obviously finished red. Unlike the Russell 2000, the NASDAQ has not quite hit bear market territory, but seems destined for the same fate as the index is 15% below its all-time highs. Once again, that's getting pretty darn close to 20%, right? Well into correction territory. The S&P similarly has faded as well, just not as much as the NASDAQ and the Russell. The Russell 2000 is certainly leading the market slump downward. However, repeating a trend toward the 2020 crash is, let's be honest, that's kind of unlikely in this situation, but it is possible. Back in 2020, the Russell 2000 was the first major index to enter bear market, and others soon followed. The index fell about 2.3% on the day. The Russell still sits around 15% above its pre-COVID basically crash levels, so do keep that in mind. If you're wondering, like, what is the Russell made up of as far as the biggest stocks? Well, here it is. I don't think a lot of people even realize this, all right? So, some of these companies you probably never even heard of. I read the ones that you probably heard of. Macy's is one of the biggest weights of the Russell 2000. BJ's Wholesale Club is one of the biggest weights of the Russell, essentially. Some of these companies, like I said, you guys probably never even heard of before. AMC, I'm sure we all heard of that. Yes, AMC, believe it or not, is one of the biggest weights in the entire Russell. Pretty crazy, right? Chesapeake Energy is one of the biggest weights in the Russell 2000, and Synaptics, which some of you guys might have heard before, is one of the biggest weights of the Russell 2000. So when it comes to Russell 2000, keep in mind, it's a weighted index like many of the others, maybe not as crazy weighted like the NASDAQ is or something like that, like the NASDAQ 100. That could be weighted so heavy toward the biggest of the big dogs, but it is still a weighted index. And at the end of the day, if these big dogs fall more, that's going to bring down this entire market much, much more, right? Look at this here. Now, so what I'm showing you right here, this is good stuff, okay? S&P 500 bear markets and recoveries. Length of bear market in months, S&P 500 decline percentage, length of recovery in months. And so I want to look at basically anything in recent times, right? Everything that essentially has happened since I've been born. I was born in 1989. So I want to know all that stuff. If we go back to the 60s and 50s and 20s, that's not relevant to me. I need to know like most recent history stuff, okay? And what we're going to find is we've had essentially 4 bear markets since I've been alive, right? 4 bear markets. And, only 1 bear market since I've been in the market. So essentially how these work usually is it takes a while for it to come back fully. We've had 2 of them that it takes quite a while. We've had also another 2 bear markets that things came back pretty darn fast. In July of 1990, that one, we came back pretty darn fast. We fell about 20% in terms of S&P 500 decline. But once again, this is showing you bear markets for the S&P 500. So that's the main index most people look at. That one's not in bear market right now. It's the Russell. But do keep in mind, if you look at this, it didn't take very long and we were right back, okay? Obviously, the 2001, that was pretty extreme. And the reason that one was so extreme is because valuations went so insane during that timeline. It was out of control, essentially. And then all of a sudden, the United States, we ended up in all of a sudden wars. And, it was kind of like a double bad situation. Let's just put it that way. So, yeah, it was a pretty dramatic time that just obviously it was pretty awful. Then we had another super long one, which was the Great Recession. The Great Recession, which was the closest thing to the Great Depression we've had, where banks were literally closing up shop. It was a disaster. We all know that, right? It was a mess, and there was consolidation in the banking space. The whole financial system went through the roughest period it has since the Great Depression, literally, right? In the tech bubble, that situation, the financial system itself held up pretty decent. In this, it was a whole different situation. You had real estate collapse. You had the stock market collapse 50%, right? From peak to trough. You had banks go under. It was awful. You had massive amounts of job losses, and we had a slow recovery coming out. And so when you compound all those things, it's going to make for a ridiculously steep drop, which was over 50%, and it's going to take a while to dig out of something like that. Like that's a no joke as holy smokers, all right? Those don't just come around very often, let's put it that way. Thank goodness. Or, whew, man, we'd be in chaos all the time, okay? Then you obviously had the Rona crash. which essentially we fell about 34, I think it was technically 35% peak to trough. Maybe they're going off closing things there, but I know it was the fastest 35% drop in the history of the stock market. We fell 35% in 22 trading days. It was extraordinary. But we also came back very, very quickly. The reason things dropped so fast is also overnight you had everybody scared out of their minds, like, oh my gosh, they're going to close the entire economy? What's going to happen here? Can these businesses make any money? And then obviously we came back pretty darn quickly, right? And so what you can take away from this is you get a mixture. You're going to get some that take a long time. At the end of the day, I think what it comes down to is, did valuations get so insane that it takes you a while to dig out of it? If I would look at the most recent market, valuations definitely got high, but there was a totally different level that the tech bubble days got to, okay? The tech bubble wasn't like, oh, stocks are a little highly priced, right? The tech bubble was, this is ridiculous. There's companies with no business models trading at insane valuations. The ones that do have business models are trading at crazy price to sales ratios of like 15, 20, 25, 30, and I'm talking about forward price to sales ratios at that moment. So the market needed to come down. If I look at our market, we had kind of an overvalued market, but not like tech bubble days overvalued market. So that is something to keep in mind there. The risk always is there some sort of massive recession we go through or something like that takes us years and years to dig out of. If there's not that, then you're usually looking pretty darn good. I want to give a big thank you to Moomoo for sponsoring today's video. If you have not downloaded the Moomoo app yet on your phone or your tablet, I would definitely do so. It is one of the coolest, most in-depth apps I've ever seen, and you can actually place trades right through the app as well here. They get a 4.7 out of 5 stars so far on the Apple App Store, so very, very impressive. One of the coolest features for me personally so far using the app has been the calendar feature, which will essentially show you economic data that's upcoming, earnings that are upcoming, IPOs, dividend stock splits, things like that. That is the type of data that a lot of us as stock market investors, we like to know, like what are the upcoming earnings, or like what's the upcoming economic data that's going to be coming out that's going to affect the market, upcoming IPOs, dividend stock splits, things like that, okay? They also have free level 2 trading data right inside their app. I'll say this is arguably the most in-depth app I've ever come across in the stock market since I've been doing this over the last 12, 13 years now. And right now they have a deal where you get 5 free stocks valued up to $3,500 each. Okay, 5 free stocks valued up to $3,500 each. All you gotta do is check out the link in the description down there, set up an account. Really cool deal. Check it out. It's the first link in the description. Now you might be wondering, what the heck is Cathie Wood up to in this bear market? Obviously, she's getting torn up like a lot of us longs out there in this whole bear market. Well, Cathie Wood just pulled an interesting move. She is back to buying Tesla stock. After months of selling, it seems Cathie Wood is having a change of heart on Tesla. Ever since August of 2021, ARK has been trimming its position in the electric vehicle maker. During the trim, ARK took its top position from 11.2% of the portfolio allocation to 8%. ARK purchased 33,482 shares of Tesla on Thursday, worth a reported $28 million based on Tesla's closing price. The shares were purchased across ARK Innovations ETF and the ARK Next Generation Internet ETF, okay? So that's a big move. Cathie Wood's out there and she's saying, hey, I think Tesla's a great deal, and she's out there buying it again. We know right now there's like record amounts of folks that are basically short Cathie Woods through the SARK, essentially shorting of ARK. And it's just interesting, man, because last year at this time it was the pile in to Cathie Wood's funds, obviously, and the inflows were crazy at this time last year. And then at this time now, Cathie Wood stocks have been devastated, and meanwhile everybody's flooded into SARK, which is shorting Cathie Wood stocks, and it's just like, oh my gosh, like people just pile into whatever it is, like at the wrong times. They have just come to that conclusion, like when the thing is hot, everybody piles in like nobody's business, right? And it's like, that's the wrong time. Like if anything, you wanted to short Cathie Wood stocks at this time last year because all of them were flying to the moon. Teladoc was like 300 and Zoom was crazy high and everything was super high, right? And so that made sense if you wanted to short. Now it's like, oh, the risk reward's just not there, just flat out, okay? Now, if we want to talk about the polar bear, the polar bear market, okay? So there's the bear market, and then there's the polar bear market. And essentially, the polar bear market's going to be reporting their earnings over the next 1 to 3 weeks. And I kind of highlighted the polar bear market. Celsius Holdings would be in the polar bear market. Fubo TV's in the polar bear market. Oatly's been, just devastated. Smile Direct Club, SDC is. Revolve's in the polar bear market right now. Lemonade They're in the Antarctica bear market, okay? I don't even think a bear can live in their market right now with how bad that stock's been. Lemonade was $188 in the past 52 weeks. $188, and it's $28 here today, and that's on an update. That's nothing short of extraordinary. Honest is in a polar bear market right now. Oh my gosh, okay? And all these companies are likely to report earnings in the next 1 to 3 weeks. And so we're going to get some moves, and I'm going to kind of talk about what I see happening here. Teladoc's in a polar bear market. Amazon's in like a, let's call it a grizzly bear market for that one. It's not really in a polar bear. It's in a grizzly bear. PayPal's in a polar bear market. That one's just, down about 50% roughly recently. Palantir, oh my gosh, Palantir. Oh, that one's been devastated. Square stock, obviously in a polar bear market. This one topped out at like $300, if I recall, not that dang long ago. So now trading at 106. Oh, Voyager Digital is, the business model's ridiculous. Like, they've done such a good job running that business model from literally no one ever heard of it 18 months ago, 24 months ago, to actually like a top 100 finance, company consistently, and a big crypto company. I mean, it's been nothing short of extraordinary. Uber's in, I would call it a grizzly bear market right now. Baba's been in a polar bear market for a while. Purple, the mattress company, betting company's in a bear market. That's another one of those, man. If it wasn't for so many other dang stocks being down so much, I would be buying Purple right now. I actually like that company. I really do. I think they got a bright future. And but yeah, it's just like so many dang stocks out there. Facebook's kind of in a grizzly bear market right now. The planet's been in a polar bear market nonetheless. I mean, my confidence levels on the planet are sky high for the next several years. It's extraordinary. GoodRx. That one's in a polar bear market. Skyworks Solutions in a polar bear market. Tattooed Chef's in a polar bear market. That one might be in an Antarctica market. Okay, it's polar bear markets left and right. Corsair's in a polar bear market. Stitch Fix is as well. Avant Brands is. SoFi's in a polar bear market. Beyond Meat's in an Antarctica market. I mean, these stocks have just been devastated, absolutely devastated. Okay, and if we're gonna just look at this practically, right? These stocks are priced for the end of the world, literally. These stocks are down 50, 60, 70 plus percent. They are priced with so much bad news baked into them. It is ridiculous, that flat out. And a lot of those companies I just showed you, if not all of them, have incredibly exciting futures. I'm talking revenue growth for days. I'm talking net incomes that will basically go from net losses to net incomes and then get to very, very profitable companies over the next 3-5 years. Most of those companies have unbelievable futures, but right now the market wants no piece of those stocks, okay? Those stocks are being priced for the end of the world. When you start seeing all these great companies trading at penny stock prices, right, which penny stock is described as, as far as SEC, any stock that's under $5, a lot of those stocks I just went through are already being priced like they're penny stocks, or getting down to that range where they're like $10 or under. They're priced for the end of the world. And a lot of those companies, guys, have great balance sheets. They're in a great financial position. They have incredible long-term stories in front of them. Incredible things they're executing on. The businesses, the fundamentals of almost all those companies I just went through are getting better and better year after year after year after year. And yet they're being priced for the end of the world. That's just flat out honest truth there, okay? Now, I did a video, this was like a month ago or so, on Peter Lynch. And what Peter Lynch says is, it was a great piece in this video, essentially, I reacted to. Peter Lynch says, essentially, when you're in the market and when you own stocks, right, and the stock price is going down and down and down, and the stock price is being devastated, right, as soon as the story just flips from horrible to decent, you get a huge upward move in the stock price. And then when the story goes from decent to good, you get a huge upward move in the stock price. And when it goes from good to great, you get a huge move up in the stock price, right? Then once your stock is priced to perfection, if your story just goes from great to good, then you see a move down in the stock price. And this is what frustrates a lot of people when it comes to earnings, because they're like, my company reported good earnings, they beat earnings. But if that stock's already priced for perfection, a lot of times you can see it move down. But nonetheless, keep this in mind, guys. When you're seeing all these stock prices get devastated to 52-week low after 52-week low after all-time low after all-time low, as soon as the story just flips from bad to decent, you're going to get a massive, massive move up in the stock price, okay? This is there's a few great Peter Lynch quotes out there. I mean, there's a lot of them, right? He says, when I ran Magellan Fund, which was this fund that just did ridiculous, like the return he got on this fund for 13 years was just extraordinary. He became super famous because of how good his performance was in the stock market space, right? When I ran the Magellan Fund, the market had 9 declines of 10% or more in those 13 years. I had a perfect record. All 9 times my fund went down, okay? That's just, this is arguably the greatest fund ever, or one of the greatest funds ever in terms of how well Peter Lynch did as running it. And all 9 times the market went down 10% or more, he went down all 9 times, okay? And so even the I guess you can call it stock market god himself, Peter Lynch, even he went down all 9 times. And so if you're in this situation, you're buying these stocks and your account's down, just remember, one of the greatest investors to ever walk this planet went down all 9 times that the market declined, okay? That's some food for thought there. He says, you get recessions, you have stock market declines. If you don't understand that's going to happen, you're not ready. You don't know, you won't do well in the markets. If you go to Minnesota in January, you should know it's going to be cold. You don't panic when the thermometer falls to below 0 degrees, right? And it's the same exact thing in the stock market. You have to understand you're going to get market declines. You're going to get corrections in the stock market. You'll get crashes in the stock market. The crashes come very few and far between. Corrections aren't happening that often. Bear markets don't happen very often, but you're going to get those. And you have to be ready for those, and you have to understand this is just part of the process. If you don't understand this is part of the process, you're going to panic sell stocks, you're going to flood out of the market and things like that. And I just love his analogy here. You go to Minnesota in January, you should know it's going to be cold. And so if you're in the stock market most of the time is going to be pretty boring. It's just going to slightly drift up, and maybe down a little bit, up a little bit, up mostly, right? You're going to get some crazy bull markets that the stocks go through the moon, and you're going to get some vicious corrections and crashes. And right now we're going through a vicious one. The Russell's fallen 21% plus in a matter of, 2.5 months or 2 months. That's vicious. And a lot of these stocks have been hit 50, 60, 70 plus percent. We're going through a very, very vicious bear market right now. And, you got to understand this is part of the process, right? People spend an unbelievable amount of time and mental energy trying to pick what the market's going to do. What time of year to buy it? It's just not worth it. I love that from Peter Lynch, because right now we're in that sort of market where everybody's trying to time it out. People are selling out of stocks, right? And it's not just like one person. Like, I know a lot of people that have sold stocks recently or have talked about it like, oh man, the market's so rough. I don't know, man. We got so much bad news and all this bad stuff, right? And they're getting kind of shaken out of the market, and some of them are like, I'm going to buy in the spring, or I'm going to buy in the summer, or I'm going to buy at the end of this year, or I'm going to buy at the beginning of 23. And they're spending so much mental energy and time, like thinking about trying to time this out and what I'm going to do here. And maybe I should start shorting stocks or buying put options and things like that. And it's like, why spend all that mental energy on just trying to time this stuff out? Because you got to understand, a lot of these stocks I just went through, they could flip in the next week for all we know. You know what I mean? No one really truly knows. But if you're trying to time in and out, you're setting yourself up into such a mess. Because it's look at the markets, right? Let's say all of a sudden the Russell goes up next week 5%. Does that mean all of a sudden you're back in stocks? Should you get back in now? Or you're like, oh no, we might shake back down. Let's say you get back in, right? And all of a sudden we lose that 5% the very next week and the market goes down. Then you sell back out now at down a 10, 15, 20% number, because we know the Russell stocks move way heavier than the index numbers move. Then you sell back out, and then you just took a massive loss and you're like, oh man, I should have stayed on the sideline. And then all of a sudden it goes up some more and you're like, oh wait, man, no, I won't get in this time because I got shaken out last time and I lost a bunch of money. And then it just keeps going up, and then next thing you know, we're going through another bull cycle again. You're on the sideline looking like, what the heck's going on here, okay? That's just, you don't do that. You just don't do that, okay? So the stock market will definitely have a correction. Everybody will say it's the end of the world. I predict it. They'll say the big one's coming, 100%. And it's so much easier to say when the market's downtrending, oh, this is a big one. This is the biggest crash. It's going to be the biggest crash since the Great Depression. You hear all these things every single time. And they throw these things out, just, whatever the craziest thing is. Oh, we're going to fall 70%, 50%. anything. They'll throw it out there. They'll see if it sticks, and everybody will give it a lot of attention. And these sorts of statements are going to get a lot of attention whenever the market is downtrending, right? Because everybody's in fear mode, so they're going to pay attention to it and things like that, right? So, I just love that one, because this was true back in the days that he was a big investor back in the 80s, 90s, things like that. And it's still true to this day. You still have the same exact activity happening where, everybody always is predicting crashes, corrections, and they're always saying it's going to be the end of the world and this is the big one coming. And, the only thing that's going to matter is gold, I guess, apparently, in that situation. Oh, gosh, okay. He says, my system for over 30 years has been this. When stocks are attractive, you buy them. Exactly what I do. I don't care. Even if I'm scared of a recession or whatever, if I see a stock that's a great price, I buy that dang stock. Flat out. Because the honest truth is, I don't know if we're going to go into a recession or not. No one can predict that. The bottom line is, if I see a stock that is trading at a great price on where I think that stock's going over the next 3, 5, 7 years, I buy that stock and I call it a day, okay? And if it goes down more, I buy the stock and I acquire more ownership of that company every single time I buy it, right? Every single time I buy it, I acquire more and more ownership. If Tattoo Chef goes down and I buy the stock, I'm acquiring more and more ownership of that company day after day, week after week, month after month, and potentially year after year, right? Until I own such a big ownership that, maybe I own the whole company, okay? Maybe not that much, but that's the way I think of it. I'm just adding to my ownership position time and time again and making my ownership of this company bigger and bigger and bigger and bigger. And as long as the fundamentals of the company are just continuing to get better, the revenues are going up over time, year after year, the margins are getting better year after year, the net income's improving year after year. As long as those three things are going to happen over the course of that time, I'm going to make stupid money in the stock, just flat out honest, especially if I'm buying it for undervalued valuations and not paying some crazy price for it, like some crazy price to sales ratio or something like that, right? Bear markets and downtrending markets, this is my quote, okay? Bear markets, downtrending markets, whatever you want to call it. They turn investors into gamblers. That's what they turn it into, okay? Not to traders, but they turn them into gamblers. And the reason being is, in the market, especially if you've gone through a good cycle, you're so used to using money that when your accounts start going down, when you start losing money, right? When your portfolio says a less number, and the stock says a less number, and you're like, oh my gosh, going down. A lot of people start freaking out and they start to go to other activities, whether that means selling out, buying back in, selling out, buying back in, whether that means doing a lot of option activity like short-term options, things like that, whether that means like all of a sudden shorting stocks, and they start having theses not around the long-term future of this company. They start having theses based upon essentially whatever they think might happen over the next week or next month or next 3 months or something like that. And I can tell you that's pure speculation and that's pure gambling. Doesn't mean sometimes you can't get lucky, right? No different than I live in Vegas, as you guys know. I could go down to the Wynn right now and go play some roulette, right? And what do we know is I could try to predict it's going to land on red, it's going to land on green. It's all a gamble, right? And so that's the thing people do in this market where they turn themselves from, oh, I was an investor, to the next thing you just start gambling on stocks. You're in, you're out, you're doing this, doing that. And this happened to me in 2015. I turned myself into this type of situation because I was trying to put myself in a position. I want to hit $1 million in stocks as fast as I possibly could. And my account started downtrending, and I went into a situation where I started making all these short-term decisions, and I took myself from somebody that was an investor since I got in the markets in 2008, 2009, all the way through 2014, and next thing you know, in 2015, I was turning myself into not a trader, a gambler, okay? We can call it that. I was doing earnings trades. I was in and out of the market. I was like, oh, maybe we're going to move back up. Oh, I'm scared. Maybe there's a big recession coming. There's worries out of China, all these things. And I took myself, all because I was trying to chase after the riches as fast as I possibly could. I took myself from a situation where I was a solid investor, like picking companies I believed in over the next 3, 5, 7 years, to all of a sudden, what company's trying to try to beat earnings this earnings period? What company might move tomorrow based upon something that might happen? That's a statement that comes out or something like that. And I'm going to tell you guys, don't do that. That's the fastest way. That's the fastest way to make your accounts go lower much more quickly, much more dang quickly when you're trying to chase after, whatever your next goal and things like that is, guys. So in a bear market, there's two things you do. You hold and you buy great companies that you love for the long term. You don't get many bear markets. We just went through them. You don't get these very often. You don't get corrections very often. And so when you get corrections, crashes, bear markets, You have to take advantage of them. If you don't take advantage of them, you could be potentially waiting years until you get the next one. I mean, literally years. So when you're in a correction, a bear market, anything like that, you buy and you buy, and you know what else you do? You buy some dang more. And you buy as long as that market downtrends, you buy it. And when it starts coming back up, you know what you do? You don't stop buying, you keep on buying it. Because at the end of the day, if you thought that company was a great price at $20 and it falls to $10, you got to keep buying that stock, right? And it bottoms at 10 and then it comes back to 11 and 12. Guess what? You still buy the stock because guess what? When you first started investing in that stock, which was probably 6 months ago, 12 months ago, 18 months ago, you thought it was great at 20. Well, if the company made great progress over that time, that means it's probably a great deal at 25 or 30 now. And so if you get to buy at 12 or 13 or 14 or 15, that's like stealing money essentially, right? So you've got to take advantage of these sorts of markets. You can't be scared. You do have to worry about if you're going on margin because you never know how deep it can get. You have to worry about short-term options. You know, a lot of people like to play short-term options. You never know when this baby can flip. What we do know is when this baby does flip, we might see some of the biggest short squeezes we've ever seen. But no one can predict exactly when it's going to happen, and that's why you got to. That's why I as far as playing some short-term calls or something like that, too dangerous because this. What if this goes on for another month, 3 months, 6 months, 12 months? You never know. And so to play it from a short-term call perspective is extremely dangerous, although it is alluring because it's like, oh my gosh, I can make so much money. Yeah, it's just not worth it. You buy the stock, you put it in the filing cabinet, it goes down, you buy some more, it goes down, you buy some more, you keep throwing it in the filing cabinet and it starts going up and you buy some more and you buy some more and you buy some more. And that's the name of the game, guys. Make sure to subscribe to the channel, guys. I appreciate you for joining me. Also, thank you for Moomoo for sponsoring today's video. We do appreciate you. If you want to check out Moomoo, set up an account, get your free stocks, all that good stuff, and access all the cool features they have. Check out pinned comment down there. Much love and have a great day.